In the year 2000, this company was worth over $70 billion. Wall Street called it the most innovative company in America 6 years in a row. Employees believed their stock options would make them millionaires. And then, in less than a month, it all turned to ash. This is the story of how one of the largest companies in the world collapsed almost overnight, and why the warning signs were hiding in plain sight the entire time. The company was Enron, an energy giant based in Texas, built on a business model that seemed almost magical. Instead of simply selling oil and gas, Enron began trading energy like a stock, buying and selling contracts for future delivery. On paper, profits exploded. In reality, something far darker was happening behind closed doors. Enron's executives discovered a loophole in accounting rules that let them record projected future profits as if they were already earned today. A deal that might pay off in 10 years could be booked as pure profit the very same day it was signed. Revenue looked incredible. Investors were thrilled. But most of that money did not actually exist yet. To hide the growing gap between fantasy and reality, executives created hundreds of shell companies, hidden entities used to bury billions of dollars in debt off the official books. To the outside world, Enron looked flawless. Behind the scenes, it was quietly drowning in liabilities nobody could see. For years, this worked. Enron's stock price kept climbing. Employees were encouraged to invest their entire retirement savings into company stock. Executives publicly praised the company's future, even while some of them were secretly selling their own shares behind the scenes. Then, in October 2001, a single financial report revealed a shocking loss of over $600 million. Investors panicked. Journalists began asking questions nobody could answer clearly. And once one hidden shell company was exposed, the entire structure began collapsing like a row of dominoes. Within weeks, Enron's stock price fell from over $90 a share to less than $1. $70 billion in value vanished. 20,000 employees lost their jobs in a single day, and most of them lost their retirement savings along with it, because it had all been tied up in company stock that was now worthless. This was not just a bad business decision. This was one of the largest accounting frauds in history. Executives went to prison. One of the world's largest accounting firms, Arthur Andersen, collapsed entirely because of its role in approving Enron's books. An entire industry was forced to rewrite the rules of corporate accounting because of what happened inside this one company. But here is the part almost nobody talks about. For years, some analysts questioned Enron's numbers. A few journalists asked hard questions about profits that never seemed to match reality. Almost everyone ignored them because the story was too good and the stock kept going up. Nobody wants to question a company everyone believes is unstoppable until the moment it stops. This is the pattern behind almost every financial collapse in history. Warning signs exist quietly in the background, dismissed as noise, right up until the moment they explode into an emergency nobody can ignore. Success can hide fraud for years, but it can never hide it forever. So here is the real question. If you were an employee at Enron, watching your retirement savings poured entirely into one company stock, would you have questioned it, or would you have believed the story everyone else believed? Write your answer in the comments below. And if this story surprised you, stay close, because next time, we are uncovering the company that faked an entire product for 15 years and convinced the world it was real.